Okay, picture this. You have just built a beautiful piece of software.
Oh, nice.
Yeah, maybe it's a sleek new accounting platform for freelancers or, a massive e-commerce site.
Right.
You've conquered your home market, and now you have your eyes on the Nordics.
Mm-hmm.
So you hire a top-tier translator, you send them your language files, and you say, give me perfect grammatical Swedish.
Sounds like a solid plan.
Right. They send it back, you plug it in, hit publish, and pop the champagne. You're done. You've officially conquered the Swedish-speaking market.
And that is exactly where you walk right into a legal and financial minefield.
A minefield.
A massive one. Because if you just translate into quote-unquote standard Swedish and deploy that to a user in Finland, you haven't just made a user interface error, you haven't just made a typo, you might have actually made your product illegal.
Illegal.
Yeah.
Just because I used the standard Swedish word for, like, tax.
Surprisingly, yes. Or at the very least, you've made the financial data legally non-compliant. And I mean, this is the really fascinating thing about the stack of documents we are looking at today.
Yeah, the localization guidelines.
Exactly. We tend to think of localization as just swapping words. Hello becomes hij, red becomes rud.
A one-to-one mapping.
Right. But this deep dive proves that Swedish is not a monolith at all. It's actually two completely different operating systems running on the exact same language.
Which brings us to the core mission for today's deep dive.
Yeah.
We are unpacking the massive structural difference between Sweden, the actual country, and the Swedish-speaking parts of Finland.
It's not just vocabulary. The source material paints this picture of two neighbors who share a language but inhabit completely different financial universes.
From how they count their money, to how they report taxes, to the very philosophy of what counts as an asset versus an expense.
And this shows why precision matters so much. Whether you're expanding a business, building software, or you're just curious about how global systems work.
It's basically a masterclass in how small details, like a currency symbol or a single acronym, can define the reality of a market. So let's start with the geography, because I think a lot of people outside of Northern Europe, or even inside Europe, might assume Swedish just equals Sweden.
It's a super common mistake. I mean, Swedish is obviously the sole official national language of Sweden. That's the easy part. But it is also one of the two official national languages of Finland alongside Finnish.
So it's not just some tiny minority language spoken by a few people in a remote village.
No, not at all. It has full official status.
Yeah.
Around 5% of the Finnish population speak Swedish as their first language. All laws in Finland are translated into Swedish. The street signs in Helsinki.
They're in both languages.
Exactly.
And then you have the Åland Islands.
Yeah.
This was the part of the research that really threw me for a loop.
Ah, the Åland anomaly. It's fascinating. It's an autonomous region of Finland, this archipelago right between Sweden and Finland. But here's the kicker. It is unilingually Swedish.
Wait, so they speak Swedish exclusively?
Exclusively Swedish, but legally, they are part of Finland.
So let me just get this straight. You have Sweden, speaks Swedish, follows Swedish law.
Right.
You have Finland, speaks Swedish, follows Finnish law. And Åland, speaks Swedish, follows Finnish law, but sits there physically like a bridge between the two.
Yep. And this creates immediate friction when you start talking about money. The most obvious one is the currency itself.
Right.
If you just have a generic, quote, Swedish language setting in your software, let's say you code it as just SV hour, what currency symbol do you show the user?
Well, logically, if I'm thinking Swedish, I'm thinking the krona, the Swedish crown.
In Sweden, yes, that's the SEK. The subunit is the or. Interestingly, the actual or coins don't even exist anymore.
Really?
Yeah, they melted them down years ago because they were worth less than the metal they were made of. But they remain the conceptual subunit for all the math and calculations. So in Sweden, you have KR and or.
But if you take that software with those hard-coded symbols to a Swedish speaker in Helsinki or, Mriam in Åland,
They do not use the krona.
they use the euro.
Exactly. Finland uses the euro, and the subunit is the cent. So right off the bat, if your Swedish translation hard codes KR or, you have made this software totally useless for a Swedish speaker in Finland.
They're looking at their invoice thinking, why am I being billed in a foreign currency?
Right. Why does my accounting software think I'm in Stockholm?
It feels like Åland specifically creates a trap for developers. Like, you want to group it with Sweden because of the language, but you absolutely must group it with Finland because of the money.
It is a classic localization trap. You just cannot map language one-to-one with territory. The documents show that for Åland and Finland, you have to create a specific locale, often denoted as SVFI.
So a totally separate language file.
Yeah, and in that locale, you have to swap out every single reference of krona to euro and to cent, even though the rest of the sentence is in the exact same language.
But money symbols are just the surface level, right? That's basically just a find or replace job for a coder. The sources we have go incredibly deep into the actual rules of accounting.
Oh, it goes way deeper than symbols.
This is where it gets really interesting to me, because it's not just about the symbol on the bill. It's about the philosophy of value.
This is the battle of the accounting standards. And to understand this, you really have to understand the K framework in Sweden versus the concept of prudence in Finland.
Okay, let's look at Sweden first. The documents mention the BFN.
Yes, that's the Swedish Accounting Standards Board. They created this modular system called the K framework. K1, K2, K3, K4.
It sounds like mountain peaks. Or maybe like really complicated tax forms.
It definitely feels like climbing a mountain of paperwork for some businesses. But for the vast majority of companies, the ones you might be building software for, the battle is really between K2 and K3.
Okay, let's break that down.
Yeah.
If I'm a small tech startup in Stockholm, why do I care about K2 versus K3? What's the actual difference?
Okay, so K2 is the rulebook. It is designed specifically for smaller entities. It is heavily tax-linked, and it prioritizes absolute simplicity. The philosophy here is strict rules, fewer choices, you follow the recipe, you do not improvise.
So it's basically painting by numbers for accountants.
Exactly. And because it's so rigid, it has some very specific constraints. The big one, the sources highlight, is the capitalization of internally generated expenses.
Let's unpack that term capitalization for a second, just so we're clear.
Sure. Let's say you are that tech startup. You spend 1 million krona paying your developers to build a proprietary algorithm. That algorithm is the secret sauce of your business. It obviously has value.
Right. I've spent the money, but I have built something valuable. I have an asset.
In many parts of the world, yes. But under Swedish K2, generally, no. You cannot capitalize that. That 1 million krona is treated as an immediate expense. It hits your profit and loss statement, your P&L right now.
Wait, so even though I built a 1 million krona asset, my company looks like it just lost 1 million krona this year.
Exactly. Your profits look lower, and your balance sheet, which is the list of things you actually own, doesn't show the software at all. It makes the company look poorer on paper.
That seems harsh.
It's conservative, it's simple, and the tax man absolutely loves it because it's so easy to audit.
But then there's K3.
Right. K3 is the alternative. It's mandatory for large companies, but it is voluntary for small ones. And it's based on IFRS for SMEs, which is the International Financial Reporting Standards. It is principle-based, not rule-based.
And strictly regarding that algorithm I just built.
Under K3, provided you meet certain criteria, you can capitalize those development costs. You can put that software on your balance sheet as a legitimate asset.
That's a huge difference. Suddenly my company looks very different to a bank or an investor. I have more assets, higher equity.
Precisely. K3 is investor-focused. It's about showing the true holistic value of the enterprise. K2 is taxman-focused. It's about paying exactly what you owe and moving on. And here is the kicker for the developer. Your software needs to be able to handle both sets of rules if you're operating in Sweden. You need toggles in the backend for how development costs are treated based on which K framework the user is under.
Wow. Okay, now let's cross the border to Finland. Do they have this K system too? Do they have a Finnish K2 and K3?
No, and this is where the universe fractures again. In Finland, for non-listed companies, the default is FAS Finnish accounting standards, and FAS has a very distinct personality compared to the modern Swedish K3.
A personality, like is it grumpy?
It's stoic. FAS is explicitly described in the sources as prudent. It is historically very conservative and creditor-oriented. The goal of FAS isn't to dazzle an investor with how much your intangible assets might be worth. Its goal is to protect the people you owe money to.
Prudence over hype. I like that. But how does that actually manifest in the numbers?
Let's look at goodwill. In accounting, goodwill is the premium you pay when you buy another company. So if I buy your lemonade stand for $100, but your actual lemons and the physical stand are only worth $20, that extra $80 is goodwill.
It's the brand name, the customer list.
Okay, makes sense. So in modern international accounting and in Swedish K3, what happens to that $80? It is often tested for impairment. That basically means checking the price tag every single year. You ask, is this brand still worth $80? If the answer is yes, the value stays on the books. It creates a very strong balance sheet.
But in Finland, under the stoic FAS system.
In FAS, they really do not like that kind of uncertainty. In Finland, goodwill is generally amortized. You chop it up and expense it over its useful life, typically 5 years.
So even if the brand is still super popular and doing great, in Finland, the value on the books is technically just disappearing.
It evaporates. Every year, a chunk of it becomes an expense. This naturally lowers your earnings in the short term. If you compare a Swedish K3 company and a Finnish FAS company side by side, the Finnish one might look like it has lower profits and fewer assets, even if they are performing exactly the same in the real world.
Just because the Finnish system is obsessed with prudence. That is wild. You could have two identical companies doing the exact same business, but their financial health looks totally different depending on which side of the Baltic Sea they sit.
And another huge difference we see in the sources is leases. This one really messes up the balance sheet. In Sweden's K3, you capitalize most leases. It creates a right-of-use asset. If you lease a delivery truck for 5 years, that truck sits on your balance sheet as if you own it, with a corresponding liability for the lease payments.
Okay, so the Swedish balance sheet is fat. It has a heavy truck on one side and a heavy debt on the other.
Exactly. But in Finnish FAS, it's usually treated as an operating expense. It's entirely off balance sheet.
So the Swedish company lists a giant truck as an asset, and the Finnish company just lists the monthly rent check.
Correct. And that right there is why localization is so much more than translation. If your software tries to apply Swedish K3 logic to a Finnish company, you're going to generate reports that are fundamentally legally wrong for that market. You aren't just using the wrong words, you are telling the wrong financial story entirely.
Speaking of financial stories, let's talk about the part of the story everyone loves to hate, taxes, specifically VAT.
Value-added tax. The logic is roughly similar across Europe. You pay tax on the value you add to a product at each stage, but the execution, very, very different.
The source material highlights a recent change in Finland that I found completely staggering, the standard VAT rate.
Yes. As of September 2024, Finland's standard VAT rate is 25.5%.
25.5%, that half percent. I can hear the software developers screaming from here.
Oh, it drives accountants and developers crazy. A fractional percentage is pretty rare. It's also one of the highest standard rates in the entire EU. Meanwhile, Sweden is sitting at a nice round 25%.
I can easily imagine a developer writing code that assumes VAT is always an integer. Like they think, oh, it's either 20 or 25, just hard code an integer field.
And that exact code would crash in Finland. You need to support floating point decimals in your tax logic. Because if you round that 25.5% down to 25 or up to 26, you are submitting false tax returns.
But it's not just the standard rate that's different, is it?
No, the reduced rates are completely different too. In Sweden, the VAT on food is 12%. In Finland, it's 14%.
So you really can't just copy-paste the tax codes from one country to the other, even if the language is the same.
No way. And the accounting structure, how you actually track all of this, is rigorous. You have input VAT, which is what you pay on your business purchases. That's usually an asset because you eventually claim it back. And then you have output VAT, which you collect on your sales. That's a liability because you owe it to the government.
And at the end of the month or quarter, you net them out.
Right. You pay the difference to Skatteverket in Sweden or Vero in Finland. But here is where we get to the most interesting part for me in the sources. The linguistic battle over what to even call these taxes in the software.
Yes. This was the part of the material that really surprised me. I actually lived in Sweden for a bit, and I always thought moms was just the Swedish word for VAT. Everyone says moms. It's on every receipt you get.
In Sweden, yes. Moms is the absolute standard term. It stands for Mervärdesskatt, literally more value tax. It's short, it's snappy, and it is universally accepted. Even in highly formal accounting software in Sweden, you will see buttons that say Moms Report or columns labeled Ingående Moms.
But if I take that exact same software to Finland, where they also speak Swedish, do they say moms?
In casual, everyday conversation, sure, people might say it, slang travels across borders, but in professional, legal documentation and software interfaces, absolutely not. Using moms in Finland Swedish software is considered highly unprofessional. It's seen as totally Sweden-centric.
Ah, so it signals that you didn't actually adapt the product for them. It's like using American spelling on a formal British government form.
Exactly. The source material explicitly corrects these translations for the Finnish market. Wherever the Swedish SVSE file says moms, the Finnish SVFI file overrides it to the full formal word, Mervärdesskatt.
That is a mouthful. Mervärdesskatt. That's 14 letters long.
It is, and it creates an absolute UI nightmare because it's so long, it breaks buttons, it overflows text boxes. But the reason they do it is legal precision. Mervärdeskatt is the direct, formal translation of the Finnish legal term arvonlisävero.
So using the full 14-letter word signals to the user, hey, we are actually following Finnish law here.
Precisely. But this leads to a fascinating new problem with abbreviations. In Sweden, you just abbreviate to MOMS. In Finland, the official abbreviation is ALV, which comes from the Finnish word arvonlisävero.
But wait, we are translating this software into Swedish.
Right, so you cannot use ALV because that's Finnish, and your user interface is set to Swedish. It would look incredibly weird to have a random Finnish acronym in the middle of a Swedish sentence, but you also shouldn't use MOMS because that's Swedish slang.
So what do? You're stuck between a rock and a hard place.
The source mandate creates a totally new abbreviation specifically for this context, MVS.
MVS. So that's the compromise. It's a made-up acronym just for Swedish speakers in Finland.
It's the localized standard they mandate. So if you look at the columns in your accounting software, in Sweden, it says MOMS reference. In Finland, the translation guidelines say it must be MVS number.
And the source material gave a bunch of examples of this, didn't it? It wasn't just that one word.
Dozens of them. Take tax account. In Sweden, it's skattekonto. In Finland, specifically for these systems, it becomes mervärdeskatekonto.
Mervärdeskatekonto. Try saying that 5 times fast. What about the profit and loss account?
In Sweden, that's resultaträkning. In Finland, specifically for these financial systems, they often prefer vinstoförlustkonto.
It's almost like a separate dialect that has evolved purely because of the legal border.
That's a fantastic way to put it. It is a legal dialect. And the why here is crucial for anyone localizing a product. The expert commentary in the sources explains that using MOMS in Finland isn't just a stylistic faux pas. It can actually be legally confusing because MOMS implies you're using the Swedish tax authority's rules. By using MVS, or mervärdeskatt, you are signaling to the user, this system handles the 25.5% rate. This system handles the FAS depreciation rules. This system is truly built for you.
It's about trust. If I open an app to manage my business and it uses the wrong slang for my taxes, I don't trust it to calculate my money correctly.
Exactly. And looking at the specific UI corrections in the document, they are relentless. Something as simple as Dutch tax plugin becomes Holland's mervärdeskatt plugin. They completely refuse to let MOMS slip in anywhere in the Finnish version.
And this brings us right back to that initial assumption we started with, that language is static. But really, language in this context is a functional tool that changes its shape entirely based on the laws of the land.
It really is. We started this deep dive thinking about simple translation, but we ended up navigating 2 completely different economic universes.
We really did. We went from the K2 rules in Sweden, that rigid cookbook checklist where you can't even capitalize your own hard work, to the prudence of the Finnish FAS system, where assets just disappear faster than you can say amortization.
We looked at how a balance sheet in Stockholm capitalizes a leased truck to look bigger, while a balance sheet in Helsinki hides it in operating expenses to look safer.
We looked at the VAT spike, that painful 25.5% in Finland versus the clean 25% in Sweden, and how that decimal point breaks code that relies on integers.
And finally, that critical linguistic distinction between MOMS and MVS, the shibboleth that tells a user if you actually understand their market or if you're just a tourist.
So to boil it all down, what is the big takeaway for you, the listener here?
What is that localization is rarely just about translation. It is about deeply understanding the legal and cultural operating system of a country. If you are building a product or even just looking at international markets, you have to look way past the language. You have to look at the regulations that shape that language.
It's a masterclass in precision. And honestly, it leaves me with a pretty provocative thought to wrap things up today. We have been talking about Sweden and Finland, 2 friendly Nordic neighbors with a deeply shared history and a shared language. And yet, a single word like tax fractures into MOMS, mervärdeskatt, ALV, and MVS.
It really makes you wonder, if there is that much unseen nuance between Sweden and Finland, how much are we completely missing when we look at markets that are actually geographically and culturally different? Like when we look at the US versus China or Germany versus Brazil.
Exactly. Is your global understanding actually just a translation of your local bias? Something to really think about next time you hit translate.
Indeed.
That's it for this deep dive into the sources. Thanks for listening, and we'll catch you on the next one.